Hey guys, Ryan Huffman back again talking about this new tax plan from Peter Roskam and the GOP. We're breaking down exactly what it's going to mean for you here in the 6th District. Yesterday I talked about the people who are going to benefit the most from this plan. That's folks who take the standard deduction and don't take any other deductions. And the reason they are the ones who benefit the most is because a lot of the most important, most helpful deductions are going to be repealed in this new GOP tax plan. So let's take a look at our baseline group here. This is your average savings based on your income, assuming you take no deductions except the standard deduction. You're going to save about $81 or $89 for folks in this low end of the spectrum, and it gets higher and higher with your income, up to about $7,000 in average savings for people who make $500,000 per year or more. But let's talk about some above-the-line deductions today. Tomorrow we'll talk about the itemized deductions, which gets a little bit more complicated. But above-the-line deductions are ones you can currently use whether or not you itemize your deductions. They're available to everybody. So an important one is the student loan interest deduction. That's one near and dear to my heart. I deduct the full $2,500 you're allowed to every year. So basically about 10% of the people in the district currently take this deduction, and it means you're paying at least $2,500 per year in student loan interest. It's capped at $100,000, so people above this range don't get the benefit from this deduction anyway. So it's only people in the middle class benefiting, but they're saving about $200 or $300 per person. The people, and it's about 10% of the folks again, they're saving $200, $300. So factor this out of the savings. For people in this bracket here, $57,000 to $102,000, they're currently saving about $2,000 as a baseline. You're still going to save some money. Even if you lose $200 or $300, you still save $1,600, $1,700. That's not so bad. But what about people up here who are already going to save only about $81, $89? Suddenly that's going to turn into a negative. You could lose $200, $300 if you're currently relying on the student loan interest deduction. So the math works out that about 5,000 people in the district are going to end up losing money just because of that one deduction going away. Another important above-the-line deduction, alimony deduction. This is utilized by a smaller number of people in the district, only about 1,500 people, but the ones who use it rely on it. The average alimony deduction is about $37,000 per year. That means about $10,000 less in the pockets of these 1,500 people. Granted, it's a small number of people, but it's going to hurt them so much. And if I were your representative and 1,500 people were going to be losing $10,000 because of a bill that I voted for, I would not vote for this bill. You should have somebody advocating for you, and your current representative is not doing that. Now, once we factor in itemized deductions, it gets even worse. These losses start to compound on each other, and we're talking about tens of thousands of people who are going to lose money. But we're going to break that down even further tomorrow.